What's good, YouTube? It's your boy Will coming back with another video on the market, but on also everybody's favorite stock, AMC. So as you guys see from the indices map, we had kind of a mixed bag day, but looking through here and some of these sectors actually, fared pretty good on a Friday. I think it was financials. Yeah, financials. As you guys can see, anything involved in the financial market had an extremely good day. Something to keep an eye on, as usually financials on Fridays are pretty mixed. Everything else was, roundabout, good and bad. Nothing really major to talk about, I guess. I do have some updates that I want to talk about in some other things we had referenced in previous videos. But let's get into it. Let's go into our favorite, AMC. So as you guys can see here today, we had a little bit slight of a red day, down 2.42%, or otherwise down 81 cents. The latter part of the day, or let's say after the first quarter was done, this first initial rundown or ladder attack down, we had a little bit of good consolidation. As you guys can see from the MACD, it's very stable. Anything considered consolidation, or where a stock starts to build support, you tend to see the MACD try to be evenly leveled out, both green and red. That's usually an indication of consolidation. Anytime we build consolidation, essentially what the stock is telling you is that it's trying or attempting to do something like this, which is build a channel or a support line for it to keep climbing on that support line. So for example, something like this, right? So if Monday morning we start the morning and we see it start to tend to do the same thing of trying to level out and stay straight, all the stock is telling you is, I'm comfortable here, I'm building support for the next run up, which at this point, based on today's performance, because we did start to head positive towards the end of the day, we would need a 17% day essentially to get back over the MACD support line, where the green would converge over the red at that point. So 17% day on Monday would put us there. Again, realistically building support and wanting to consolidate here. My anticipation is we will either have a level day on Monday or a slight red day. Again, pushing towards the downside, as you see here, this trend where they do these short ladder attacks every single morning on the stock. Literally, it opens, it'll do a run up and then steady bleed off right from the start. And that has consistently been happening day after day after day, right? Again, you have to consider and think of it as well from the shorts position. Anyone that's holding a short position, they are essentially on the hook. Right now, they shorted the stock when it was like $5, $6, $3, $1 a share. And they did it at the tune of, as we've seen from the records so far that we know of, 79.75 million shares. So just do the math. That's millions and millions of dollars when they shorted this. Obviously, as the higher and the higher and the higher the price went up, the more and the more and the more money they lose. So it's in their best interest to try to bring it down as best as possible before they find a point where they will be comfortable in covering and paying it out and basically buying back the shares. Or what I feel is the short strategy, to be honest, they're trying to play a waiting game where they continuously bring down the price and bring down the price and bring down the price until, new retail investors or people who are new to the market that don't understand what is happening or don't understand how the market works or how a stock trades, essentially will just sell out, right, because of impatience. I think Warren Buffett was the one that said the stock market was one of the best tools for patient investors, where money is transferred to the patient and the impatient are constantly losing. So again, Warren Buffett, for those that don't know, that's one of my idols. I look up to that man. That man is a self-made billionaire, literally. Very modest, very humble. Still drives like a 1995 Cadillac DeVille. Still lives in the same house in Lincoln, Nebraska. Lives a very modest life, but is a self-made billionaire. But again, so that's kind of what to expect for Monday's trading action. Going a little bit deeper in the analysis, Let's look at the options chain. As you guys can see, today we were almost evenly split calls and puts. We had 320,000 calls versus 254,000 puts. As I've explained to you guys previously, 9 times out of 10, calls are always going to win. I think it's only been a couple days, like a handful of days, where puts have outweighed the calls. Again, reiterating the bullish sentiment on this stock. If we go out to the strike date that we like to see, which is the January 2022, as you can see, the other day we were at 55,000 contracts. Now we're at 57,000 contracts. So that's an additional 2,000 contracts that were $259 a piece. I haven't explained this yet because we haven't deep dived into options, but essentially when you buy an option contract, you're buying this ask price. And I know we see like, oh, what's only $11.45? But just remember, one option contract is equivalent to 100 shares. So that means that these prices are multiplied by 100. The same when you're trying to calculate your profit. That's going to be delta. Delta is how much money you make for every dollar a share goes up. You make this amount times 100, right? So quick example just to try to sum it up and bring the puzzle together when we talk about it later. You buy a stock, it goes up $10. You only own one share, you made $10. You buy one options contract and the stock goes up $10, and let's say we had this one here, you would make $67 on that $10 run up because you're multiplying this number by 100 essentially because you control 100 shares. But don't get caught up in the, I guess, in the rabbit hole with that one. I promise I'll make a video further explaining options contracts because it is a really profitable way to play a stock, essentially not just doing shares but also doing options and shares. Think of it like a multiplier to how much profitability you can make in the long run if you are really convicted in a certain specific stock, right? But I'll get to the strategies in that later. Let's see. So as far as AMC, we kind of know where it stands. We kind of know an update for Monday. Again, if I was a gambling man, I would say it's going to be more of a little steady bleed off, more than anything else, just based on the options chain being so close, and also looking at the failure to delivers for Monday's trading day, which is the 11th. There are only 452,000 shares that need to be purchased based on these failure to delivers. So these failure to delivers, if I didn't explain the other day, when you see something reported as a failed to deliver, that means 35 days ago from this specific date, the hedge funds failed to acquire 9,058 shares at a value of $452,000, right? But as we look, for example, on, the 17th, you can see 1 million, so that's 41,000 shares. The 18th, we have 2.5 million shares. These days, specifically, the 18th, the 17th, the 16th even, right? Another 98,000. You can expect to see a nice push in AMC, or that's my speculation, right? Based on historical data and how the stock has reacted. But again, we'll wait and see what it happens. Either way, we're going to be patient. Apes buy and hold, so we're going to continue buying and holding because again, we don't have to pay any money to hold shares. Hedge funds are paying daily interest for holding a short position. So I guess we'll see who can hold the longest at this point, right? But again, just to kind of give you an expectation. So the last thing I want to talk about in today's video, yesterday I brought up Pinterest as a company, right? I was basically trying to explain to you guys how Pinterest had gone from trading essentially in the 80s to literally falling overnight to the 50s, and how that had to do with earnings, right? So I know that seems really confusing or like a really difficult task, right, to try to figure out how to do that. But in reality, I'm going to show you guys it is as easy as looking at a chart, right? So we're going to use Google. Went to Google, searched Pinterest earnings report, clicked on the first link, as you see here, financial results, quarterly results. You click on it, you go down here, you go down to quarter 2, and you get this beautiful little press release, right? This press release is going to cover revenue. I mean, look at this, 125% increase from 2020 to 2021 in revenue alone. Come on. You see global revenue, the United States, international. Look at these numbers, 125%, 107%, 227%. But here is what I had mentioned was the trigger that instituted a sell-off, making this stock go from the 80s or the 70s down to the 50s, right? And why it made a good buying opportunity for anyone who, you know, wanted to buy in and make some money. Like, this is a perfect example of the lesson we were talking about yesterday: buy low, sell high, right? So with that, let's see here. Let's go and talk about that analysis. So we had talked about monthly active users. As you can see here, globally, they went from 416 million to 454 million. And this is the one that was the only number negative that concerned essentially institutional investors. We had a 5% drop in monthly active users in the United States, basically going from 96 million down to 91 million, or otherwise a 5% decrease. Because again, as the year has gone on and progressed through 2021, you now see the transition going from a COVID state to a non-COVID vaccinated state, people traveling, flying, going out, you know, doing things. So they're obviously not going to spend that much time on social media, on Pinterest, posting pins, essentially, right? This is what that indication of these numbers would tell institutional investors, which means that this price to them is inflated. At the $80 mark, it's not a good deal. They valued it better at the 56.81. But essentially, this is what you do when you look at financials of a company and you're trying to make a determination if whether I should invest in them or not. But looking at this, again, I'll turn back to the main point. It's earnings. A company needs to be profitable. You have a company who had 272 million in 2020 and is now going to 613 million for a 125% increase. It's a social media company. They don't have a lot of overhead. They don't have a lot of expenses. I mean, they can have some liabilities or some expenditures that could, you know, bring down the revenue. But to me, that says this company's trending in the right way, right? And that is what would give me conviction to believe or invest in a stock. This little 5% drop in monthly active users in the United States, so what? Look at how much you build globally and internationally. Like, you're up 9% and 13%. I mean, I think it's pretty self-explanatory. Again, this is how I base decisions on fundamentals when I choose and what companies I'm going to invest in, because you have to use logic, you have to study the chart, you have to study the indicators, and you have to look at earnings, right? And as you guys can see, it's just going through numbers. If you see something in 2020 low and you see it increase in 2021, those are all good signs. This company went from 669,000 in cash to 1 million in cash. 1 million. Again, that's a $400,000 jump. That's not something to fret about, or I would say not something to look negatively at. Again, look at Facebook. So then you can say, all right, well, let's compare the industry, right? Let's look at Google. What is it? Alphabet, actually? Alphabet. 2,740 a stock. Let's look at someone a lot of people know. Snap. $75.98, you know, right at the $80 mark. This one actually just recently gapped up based on earnings. I'll be pulling this one after this video is done recording, and I'll be analyzing this. I'll probably use this one as an example on Monday so we can go through the earnings to kind of teach you guys the difference or distinction. See if I can find what made them so bullish on Snap. Facebook. Let's take a look at Facebook. $363.51. Again, earnings just reported, and they also had a decrease. So I'll probably pull this one as well, and that way on Monday's video I can give you a good comparison between Snap and Facebook on financials, and we can go and deep dive in that to again teach you guys a little bit more in relation to how to analyze financials and earnings. As you can see here, here's the thing I talked about earlier: current liabilities. You see in 2020 they had 49,000. In 2021 they only have 48,000. That's a decrease. That's good. You want to see less liabilities and less expenditures. Looks like leases. I mean, it's pretty self-evident. I think this was a major overreaction. On my opinion, again, it's not financial advice. I'm not telling you what to buy. I'm simply trying to teach you fundamentals of how to look at companies when you're choosing to invest in the stock market. I feel, in my opinion, a 5% decrease in monthly active users in the United States does not merit a $20 or $30 price dip in stock or share price. But I think you guys get the point. Again, as we keep going down these videos, I'm going to keep giving you guys nuggets of information and things you can look at so that you can make better educated decisions for yourself. Again, the goal and the purpose of my channel is to teach people how to invest correctly, right? If I can teach you how to invest correctly, you can make better financial decisions for yourself and become more profitable, even if it's just going to be a side hustle or if it's something you would consider going in full time. As you can see, I am very passionate about the stock market. It matters to me. I have felt for a really long time it's the great equalizer. This is what bridges the gap from having some kind of money to leaving your kids generational wealth kind of money. And all it takes is dedication, passion, commitment, and studying. Simple reading, to be honest. Simple analysis of numbers. One number smaller than the other, 2 plus 2 makes 4, right? Kind of deal. But anyways, guys, I hope you liked the video. Please like and subscribe to my channel as it helps with the algorithm. Every video has been getting more and more likes, so I'm excited to see you guys like it. If you guys have questions or concerns, leave them in the comments below. I will be happy to address it. If you guys have a tip or recommendation you'd like me to look at or something you'd like me to specifically teach, leave it in the comments. I'll be happy to address it. Otherwise, guys, have a great weekend. I'll catch y'all next time.